Alright, this is Chris from MarketSwingTrader.com. Today we're going to go over the Greeks. Now this is just an educational video. It's not an endorsement to purchase any stock or option. Just make sure you consult a licensed financial advisor before investing in real money. Now on the educational video we are going to go over the four Greeks, and they are Delta, Gamma, Theta, and Vega. Now Delta. First what I'm going to do is I'm going to look at the December option on the SPY. And I'm going to go down here and purchase the 127 strike price. And I'm just going to go over to the risk profile. Now in the risk profile, as you can see here, we have the four Greeks: Delta, Gamma, Theta, and Vega. And Delta, it's the change of an option price given the price movement of the underlying stock. So what this means is when the stock moves, it's going to fluctuate in value. Now if we go over here to the wrench and you click on that, you'll see stock price. Also you'll see volatility adjustment and yield. We're just going to focus on stock price. So if you look at the Delta here, it says 49.84 on the Delta. So the P&L, as you can see, is $2. So let's say the stock moves up because we bought a call and we want it to go up. As you can see, the stock went, well, the option went up in value. The P&L went up in value. So that is Delta. It's the change of an option price given the price movement of the underlying stock. So we purchase a call, so we're going long. So in order for us to profit, it needs to go, the stock needs to move up, where the ETF needs to move up in value. So it did, it moved up $1. So we could go ahead and sell it back into the market and make a profit. However, it also, if you went down in value, you would lose money. So you would be losing $49. So that is what Delta does. It's the change of an option price given the price movement of the underlying stock. So when the stock moves up or down, you know by looking at the Delta, if it goes up $1 or down $1, how much you're going to profit or lose. Now Gamma. Gamma is a measurement of how delta of an option will change. It shows the option delta sensitivity to market change. It's the rate of change for delta. So I'm going to go ahead and reset the parameters and reset the slices. Now Delta and Gamma are the only Greeks that work together. So if we look at Delta at $49 and we have Gamma at $4, okay, so let's say we go back and let's say we adjust it to go up $1. As you can see, the Gamma was $4 before. It was $49. Now it's at 53.89. So as you can see, the Gamma with the price movement, it's the rate of change for Delta, and those are the only two that work together. Now if we go to Theta, Theta is the rate of decline due to time decay of an option, because options will expire. That is a given. Prices of a stock will fluctuate and options expire. Those are the two givens within option trading. Now if we reset the parameters and reset the slices, okay, and that's one thing that I really like to do is always click on reset parameters and reset slices. And the reason I do that is because so many times I might change the date or the volatility, and I look at it and the numbers are skewed. So that's why I'm always continually resetting parameters and the slices and things like that. Now Theta, we are negative Theta. So Theta is the rate of decline due to time decay. And time decay is as each day passes, you're either going to be losing money because you're negative theta, or you're going to be collecting money because you're positive theta. There are positions where you are positive theta. So each day that goes by, you'll be collecting money. So given certain parameters, and we can go that, and we will go that into the future. So theta, right now we're negative 548. So if we look right here, and this is after hours on the 11th, and we have the 12th and the 13th. Let's say we go to the 14th. Now, if you look at the P&L, you see we're negative 2, but if we go to the 14th, now we're negative 18, because a few days have passed by, and the theta is at negative 5. So each day, if we go to the 15th, as you can see right here, now we're negative 24. Now we're negative 30. And as you can see, theta is working against us. And as we get closer to expiration, if the stock does not move, then we will be losing money. So you need to be right in your direction and your timing, because theta, if you're negative theta, it's going to be working against you. So that is one thing that you do need to look at. Now, Vega. Vega is the change in the price of an option for a 1 point change in volatility. So let me go back here and reset the parameters and reset the slices. Now we have right here volatility adjustment. Okay. So if we look at volatility adjustment, now Vega is a change in the price of an option for a 1 point change in volatility. So if volatility changes, as you can see, P&L open, the Vega, it's the rate of change, so it's going to be 1585. So if we go to 1 point, as you can see, it did change. Now volatility, if it goes up or down, it's going to be the rate of change. And as you can see, the rate of change in the volatility. Okay, so that is how Vega affects your option positions. And those are basically what you need to understand. You want to keep a look at your delta, your gamma, your theta, and your Vega. Okay. Now, understanding the four Greeks and how it affects your positions and the types of option trades that you are in, well, the best way to understand it is to go ahead and paper trade and start working with different option strategies and see when the price moves how it actually affects your position, your P&L for the profit. And that way you will start understanding your delta, gamma, theta, and Vega. So those are the four Greeks, and those are the basics of them. You can go onto Google and Google the four Greeks and start understanding, start reading more about them. I've got some definitions on my site, just definitions of the four Greeks that I went over. They are on marketswingtrader.com. And also I'm going to be going over more educational videos, and we will get always talk about the Greeks and how they affect positions and things like that. And also I will be putting on live trades. So I will be going over the four Greeks as well when I'm putting on live trades. So that is the four Greeks. Those are what you need to understand when you are trading options. Thank you.